Imagine peering into a crystal ball to glimpse your startup's future success, understanding its growth trajectory, and knowing exactly where to allocate your resources. For startup founders, that powerful crystal ball comes in the form of robust financial statements. These essential documents provide the foundational data and structure needed to create accurate and insightful financial forecasts, guiding every strategic decision you make for your budding enterprise. The core mechanism here lies in the structured data these statements provide. The three primary financial statements, namely the income statement, the balance sheet, and the cash flow statement, each offer a unique lens through which to view your business's past performance. This historical data is not just about looking backward. It is the bedrock for making informed projections about future revenues, expenses, assets, liabilities, and critically, your cash position. By understanding patterns and relationships within these past numbers, you can build credible assumptions for your future models. To effectively use financial statements for forecasting, you will start with your income statement, also known as the profit and loss statement, to project future sales and revenue growth. Analyze historical sales trends, customer acquisition costs, and pricing strategies to estimate future income. Then, factor in your cost of goods sold and operating expenses, breaking them down into variable and fixed components. For your balance sheet, use past asset and liability figures as a baseline to project future working capital needs, property, plant, and equipment requirements, and long-term debt obligations. Finally, and perhaps most crucially for a startup, the cash flow statement helps you forecast your liquidity. By projecting future cash inflows from operations, investments, and financing activities, and balancing them against projected cash outflows, you can identify potential cash shortages or surpluses well in advance. An insider tip for startups is to pay close attention to your unit economics, which are the revenues and costs associated with a business model on a per-unit basis. By breaking down your income statement data into per-customer or per-product metrics, you gain a granular understanding that significantly enhances the precision of your future revenue and cost forecasts. This deep dive into unit economics allows you to stress test your assumptions and build more resilient financial models, anticipating challenges before they impact your runway. Ultimately, financial statements are not just historical reports. They are dynamic tools that empower you to anticipate, plan, and adapt. By meticulously analyzing your past performance through the lens of the income statement, balance sheet, and cash flow statement, you gain the clarity to build confident, realistic forecasts. This forward-looking perspective allows you to secure funding, optimize operations, and steer your startup towards sustainable growth and lasting success, transforming uncertainty into strategic advantage.